so many people who go self-employment route, what they're really saying to themselves is, I want to build an income for myself because I'm going to go work for myself and I'm going to have so many clients and that's going to be my lifestyle. And what you really need to think about is, are you building that income or are you building a business? Because the two different things.
Welcome to Biz Help for You, the show that saves you the expensive learning curve by providing advice from industry experts in every facet of the entrepreneurial journey. Too many small businesses collapse. According to the U.S. Census Bureau, 20% fail within their first year, and less than 35% make it to their 10th anniversary. The goal of this podcast is to change that statistic. So if you're interested in learning more to be a successful entrepreneur, tune in today.
Let me tell you a little bit about my guest today. Ryan Derousseau is a fee-only financial advisor who specializes in working with therapists, private and group practitioners, and the self-employed, helping them thrive financially so they can focus on their clients. Drawing on his years of experience working for himself and his deep knowledge of the financial space, he has developed a process to help clients align their business with their goals, family, and future. You can learn from his approach to integrate personal and professional financial planning to achieve sustainable growth and stability. So Ryan, welcome to the show.
Yeah, absolutely. Thanks for having me.
I'm glad to have you here today. I'm looking forward to our discussion. But before I get into questions on the topic, I would love to ask you the story of how you became a financial advisor.
Yeah, it's a roundabout path. But essentially, when I finished school, I became a journalist. And I just happened to fall into investing and personal finance writing as a journalist. And so one of my first gigs was actually covering financial advisors. And so I was covering the people that I am today. And I worked as a solo contract writer for almost my entire career because I just preferred that lifestyle to the in-house one. And meantime, learning sort of the missteps and things that solo entrepreneurs or entrepreneurs in general kind of make. And so a few years ago, I was like, you know what? I want to work one-on-one with people because honestly, I'm talking to sources and I could answer the question before I got my question out. And so I wanted to work one-on-one with people. And so then I got certified and went through the steps in order to be able to help the self-employed more directly.
Nice. I always enjoy hearing like how people got to where they are, because some know like this is what I want to be, and some of us kind of made our way there. So thank you for sharing your story. But I would love for you first to just share key steps that a solo or small business owner should take when they first start to pay themselves. A lot of people at first think they can't even afford it, right? But if they are thinking like, okay, now I can start taking out some money, like how should they do it?
Yeah. So when we're starting in a business, oftentimes people kind of imagine that kind of like tech entrepreneur in the basement or something like that in their parents' basement or garage or whatever. And it's not like that for most of us, but we can take some lessons learned from those folks. Because when you start paying yourself, you need to determine how much really you need to pay yourself. And how do we do that? We actually look at the personal side. We always talk about sort of separating the business and personal, but so much of the personal impacts how we feel about the business, and so much of the business impacts how we can operate on a personal front. And so when you're starting out, looking at sort of what your expenses are and what you have to cover on a month-to-month basis will give you sort of your paycheck level. Because at first, we're only trying to cover what we absolutely need to cover. And that way there's more room to reinvest in the business. We have to cover taxes, all those sorts of things. But as long as we're keeping our expenses low, then we have more flexibility in the business. And then at some point, the business is going to start taking off and we can start, giving us the good stuff, like the higher paychecks and stuff like that. But as we're getting started, that's kind of the process that we need to go through in order to understand just how much we can take from the business for the personal side.
Well, and I know sometimes people will create this budget, or plan, like, I think I'm going to bring in this much revenue. I think it's going to cost me this much to operate. And so they're determining what that amount is off of some calculations they've created. But often the income maybe isn't where they thought it was going to be, or there's those surprise, expenses, or you mentioned taxes. Maybe they didn't even think like, oh, I need to save, for taxes. So do you have any tips on how to help entrepreneurs do a better job, maybe of really truly estimating what they're going to have left over that they can use to pay themselves?
Yeah, it is a real tough act to kind of project when you're first starting out, because I would say entrepreneurs and small business owners in general, while their personalities are all different, they tend to be optimistic about their own business in some way, and when they're going to actually be coming, getting income from it. And so what I find is that people do tend to overestimate sort of how much income is going to come in and when it's going to come in, because there's also lags of like when you do the work and when you actually get paid and when you actually see it. Meanwhile, the bills are piling up that entire time. And so one thing that we do when I'm working with a client is we want to figure out sort of what they're going to make in the course of a year. It's not about on a month-to-month basis. We want to level it out because, as we know, in the small business space, income is like, it's like this.
Right.
And meanwhile, the bills are going like this. So the only thing we can do is kind of try and even it out as much as possible. That's why we try and take that year-long number and then from there calculate what we expect from business expenses, what we calculate from taxes to come up with essentially what your lifestyle expense is. And that's how much money you have to spend on things in your personal life. Divide that number by 12. That's what you should be paying yourself on a month basis. It's hard in those first few months because you don't really know what's coming in. But once you've gotten past those few months, you've gotten a little bit of like at least floor level income coming in. You can start doing that and start paying yourself on a regular amount. And then you're only paying yourself that amount until you've built some security in the business. So if you have a great month, you're still paying yourself that smaller amount. So you're starting to build security in the business.
Well, that makes sense as well, too. And I've said, to people when they are asking me at first, if they're just starting out too, you can create that budget of what you think it is, but then I would say reduce what you think the income is really going to be and increase what you think the expenses are going to be. And if it doesn't turn out that way, then okay, you have extra money, but at least you've planned for it. So you're not thinking you're going to have more available than you really do. And the other thing I think is really important is putting themselves on the calendar to invoice their customers, right? Because a lot of times when they're first starting, they're so busy trying to do the work for their customers, they don't send those invoices out timely, right? And then, like I said, when they need the cash, they are, but now it's going to be how many ever weeks left again until, maybe they get paid. So do you have any strategies maybe that you could give to the entrepreneur who's hearing what we're saying and saying, oh, I don't want to fall into that trap and I want to make sure that I stay on top of, the cash flow and monitoring all of that as well?
Yeah, I mean, that's going to really depend a bit on the business. I mean, one thing I would say is invoice as soon as you're able to invoice. Like, do not hesitate. You did the work, get paid. There's going to be typically a 30-day, 60-day lag between you actually get paid. So get going as fast as possible. Do not hesitate there. When I, like a business like the contract writing that I would do, I always wanted a certain amount of that I'm working on right now, a certain amount that I've invoiced, and a certain amount that I know is coming in that month. So I always had different lines of money that I knew was either coming in or about to come in different stages. So I was able to kind of keep things very consistent that way. In terms of like other professions, like I work with a lot of private practice therapists. That's like my main sort of client. And one thing that we're always working on is sort of like different business lines. So like in the private practice space, there you can go private pay client. So someone comes to you, they're not using insurance and they pay $200 for a session. Or they can go through insurances, and there's benefits to that because you don't have to do any marketing or anything like that, but you're getting paid less per session. And then there's like other things that you could be doing from like a coaching or outside, the traditional therapy window. And what we want to do is create multiple sort of lines. So we have different types of clients coming in, different cash flow coming in, because certain ones pay faster, but certain ones are more accessible than others. So it's kind of a balance, and you really have to create that balance within your own sort of expertise and sector that you're working in.
Right. So we do know too, as you said, you have to kind of figure out what your lifestyle needs are and then figure out over an annualized basis, what you can earn, and you're going to take that amount out each month. But let's say they run into some challenges in the business and they, don't have the cash, but yet they kind of are dependent on that too for their personal lives and that income, especially if they've left a job to do this. So how do you help them manage that side of not really wanting to get into debt either, but needing to have some finances to help pay their personal and their business expenses?
Yeah, I mean, part of it is having the conversation before they leave their current job to ensure that they have the emergency fund in place to just leap at this. Because one thing I would love for, someone who's thinking of going this route is to build the emergency fund in place. And I would get that up to ideally 6 months before stepping away, just because of what you just talked about. There's going to be hiccups in the early part of the process. And if you have some cash available to you, you can avoid, the other things that we worry about, credit card debt or a small business loan of some sort. Now, if there's a truly great market at hand and a real opportunity, and it just needs time to get going, maybe a small business loan is something that you need to consider. But until you've used all your cash, maybe try and see where the cash will get you, I would say. Because I always hesitate to go the debt route, just because then you're kind of stuck and you're now taking a risky thing, working for yourself, and making it even riskier. And that we kind of want to avoid until we need to.
Yeah, I agree with you on that too, because then you're digging a bigger hole, and then you're more stressed and all of that too. So like I said, even if you could stay in your current position and do this on the side till you start getting something built up and having a little bit more revenue that you could depend on, I think is also an excellent idea. But you also, had mentioned about therapists, different things that they can do to generate different types of income. Do you have some other tips or maybe some mistakes that you've seen where entrepreneurs, aren't necessarily doing what they need to do to create the sustainable income for their business?
Yeah, I mean, a big one, in my space that I often see is they'll just say, okay, I'm going to become a coach, or I'm going to create a course, and this is going to create so much passive income. It's going to be fantastic. Because in the private practice space, there's a real issue of burnout, because they're listening. All their income is coming from one-on-one sessions. So they're listening to people, probably very serious conversations a lot of time. And every hour worked is an hour, every hour earned is an hour worked. And that after a while starts to really grind on them. So they love the idea of courses and passive income, but they got to realize that it's not truly passive income. What it becomes is then a marketing job, because now you're marketing a course, and without actually accounting for that in the budget when you're sort of building this, and time frame for when you will create a sort of a mass of people that would go to this course, it's going to be a lot of work. And if you don't have the space in your job to build that, then it's not going to be really successful. So whatever sort of that extra business line is, one, make sure it fits within your expertise. Ideally, you already have a market for it, and your current clients are that market for it. So it's more of an addition to, or an easy audience to already market to, because you're already marketing to them. That I find very useful when that comes along. And then there's other things so many people who go self-employment route, what they're really saying to themselves is, I want to build an income for myself, because I'm going to go work for myself, and I'm going to have so many clients, and that's going to be my lifestyle. And what what you really need to think about is, are you building that income or are you building a business? Because the two different things. Like the income strategy, it can work for a while. You can build faster, but you're going to get very tired of it at some point. Whereas if you're building a business, that's something that can live beyond you and that can have real value. You can, create space for like vacations and things like that if you're going that route, whereas the income route is going to be a lot more difficult. And so you also just need to be aware of what you're building from the start to determine then what like you actually need out of this like extra business line or something like that.
Right. Well, that makes sense too, because if everything is dependent on you doing the work, if something happens or you want to take a day off or you get sick or something, right now your income is impacted as well. So even planning that into your scenarios, even like when you think you're figuring out what your income is going to be, right? You need to take all of that time. The other thing I think people don't think about is they think, well, I'll work 40 hours a week and I'm going to work, the 52 weeks a year. So I have my 2,080 hours. But not every hour you work is even billable, right? So, do you have any tips for someone to figure out how much time, if they really are billing on time, is available for billing versus overhead, admin tasks that really aren't?
So one thing I can break down for clients is sort of like how much time do you have in a year for your like job and sort of the hours that you're working. And what I do is we start with sort of your income goal. So what's your income goal? And then based on the income goal, how much are you getting paid per hour of work to reach that income goal? So like how many hours do you actually need to work in active work stuff towards that? And so let's say your $100,000 is your goal and you get, I'm not going to be able to do the math off the top of my head, but let's just say like you have $300 an hour, and then you have, and so whatever 100,000 divided by 300 is, that's how many hours that you need to actually be in seat working, right? But then let's say a lot of my clients are working 4 days a week. So they'll work like 8 hours a day, 4 days a week, and then the fifth day may be doing their own stuff or just admin stuff. And so I say, okay, if this is how many hours you need and this is how many hours you have in a work week, what's the difference? Okay, and does that match with what you think you're going to need from an admin time span? I forget how off the top of my head, because I have a formula, but essentially I think I look at like what 5 hours of admin time per week is a times 52 or 48, because I include like 4 weeks of vacation in that. Yeah. And what that hour is. And then through that, I can figure out sort of how much actually time they have extra available. And so I'll have clients who are just completely burnt out come to me and say, I can't be in front of a client anymore. I need other money. Would it be okay if I did DoorDash? And I can actually break it down to them by like free time. If they want this much money and they have this many clients, this is how much like DoorDash time is going to be required in order to reach that mark. And of course, it's way, way, way more time than they even have available, let alone they want to dedicate to something like that. And so it does open their eyes to sort of what's available and what they need in order to get to sort of said income mark that they have.
Well, and earlier you were talking about looking at how much you can pay yourself and you keep it the same, throughout the year so you can start building up your emergency fund. But can you talk about maybe the difference between conserving cash as needed for an emergency fund versus reinvesting it for growth in your business?
Yeah. And this kind of gets back to sort of that like income versus business dynamic. Because what you're doing at first is you're really building income for yourself, but you need to transition to a business. And that requires either investing it in the market, investing some of the income in the business or other businesses, or investing in real estate. Because it's really the only three ways to invest in America. And that's going to be a requirement in order to kind of build your wealth in whatever you're doing. And so once you've reached, say, just say 3 months, I like to see 3 months of emergency cash in your personal account and 3 months in your business account, ideally. And then once you're over that mark, then we can start looking at other ways to invest, whether it's putting some towards your retirement account, because that's like one of the best passive income tools that you can actually create for yourself is like a retirement savings. Or how much would you need for said business in order for it to grow? Like, what's your growth idea? Are you thinking of hiring? Well, let's break down what the true cost of a hire is and how much income, extra income or revenue they're bringing in, and then see if that's worthwhile. So I often do that in that type of analysis for folks, just because, it's common to want to hire a younger therapist or something like that in my space. And so we'll see that quite a bit. And then, sometimes it is real estate because that's what people really want to do. And then so we'll talk about sort of that. That's a little more complicated, a little more person specific, but that's also another option.
Right. And before we were talking about like debt is generally not a good thing to get into if, cash is tight, because you don't want to use credit cards or things like that. But I know sometimes there is some strategic debt maybe that might help to really expand the business and create that long-term wealth as well too. So do you want to talk about that? Maybe like, when is it a wise decision actually to maybe get a small business loan, an SBA loan or something to help you expand your company and build that wealth, versus like you shouldn't really get into it because it's not the best type of debt to be in?
Yeah. And I mean, it's pretty simple when thinking about debt. Like if I come to you and I say, Candy, I'm going to give you $50,000, or you're going to pay me $50,000 and you're going to get $100,000 from that. You would do that every single time, because every time you're paying me $50,000, you're walking away with an extra $50,000, right? And you should look at like debt the same way, like a small business loan. Are you actually going to profit from this after the interest rate is involved? And I would encourage people, when they're considering this, is really create a proof of concept of whatever it is you're doing. Make sure it actually works before you go about the part of, I'm going to invest so much money into this and actually see the gains. Because if you're doing that without the proof of concept, you're kind of flying blind, other than you're hoping it works out. Whereas if you create a proof of concept, you've seen how it works and also seen sort of some of the issues that might be at play, then it's a little easier to take that investment and make sure it's actually worthwhile after the fact. And then, in terms of just like analyzing the loan, you need to know the interest rate. You need to know like the term of like how long it's going to take to pay off. But as long as that works within the framework of whatever you're kind of building, then it can be a great tool for that.
Exactly. And a couple of minutes ago too, you were talking about putting money away in a retirement account. And I know a lot of entrepreneurs think, well, I'm cash strapped right now. I'm going to do that later. And at some point, then I'll be putting away for my retirement. But that could be years and years down the line, depending on how the business goes and how quickly it grows, right? So do you want to maybe talk about like, would you really want to postpone investing at all? And, having that little extra cash in your pocket, or is it still wise to put something away, starting now and not depending on your business to actually be able to help you in retirement? I think a lot of people think, well, someday I'll sell my business and then I'll have a chunk of change, right? So do you want to touch on that?
Yeah. And the selling of the business, build with the idea of sell in mind. We don't know what the market's going to look like, how like viable your business is going to be down the line, but take that approach. Still, when people come to me as a new client and they say, I have a business, I market it as $0, because we don't know what the actual market says out there for the business. But I would encourage folks to kind of think like that with a business. But from a savings standpoint, small business owners, entrepreneurs, whatever, I would say they tend to put themselves last in this sort of dynamic. They're paying themselves last. They're saving for their long-term last. And it's because they're looking forward, they believe in what they're doing, and they know like something's going to come from this. And so they're willing to do that. But I would encourage you to not do that. because any strong business is going to be able to pay their owner and pay the owner's like long-term needs. And so the sooner you can start incorporating a savings plan, the better, because one, you're getting tax savings from it. Two, you're allowing for growth that you're not having any part of other than just the fact that you've invested the money. And so the sooner you can incorporate it, the better. If it requires like really looking at your business finances and your personal finances to figure out that money, I mean, that's where someone like me comes in, and, you know, we help people find that, to encourage that, because that's what we want for people long term. And so my one piece of advice is really just don't put yourself last. You're doing this for a reason. You don't need to be, you're not going to make any more or less money if you're a martyr about it. You're not going to make any more or less money if you're eating ramen for, like a year. Like, it means nothing. So like, the sooner you can benefit from the business you're creating, the better.
Mm-hmm. Perfect. One final question then regarding like that retirement. I don't know if you want to really go into too much detail on this, but can you maybe just give an idea of, for their own retirement, should they just like invest generally in the market? Should they get a 401k, maybe a SEP IRA, like a Roth? Like, do you have any tips on that for anyone who's listening?
I mean, I can't give personalized tips on this, but one thing I'll say is generally if I'm working with a solo entrepreneur, I'm guiding them towards a solo 401k. Generally, if someone has a group, then we're looking at either a SEP IRA if they want to contribute to the group, or we're looking at like a taxable account if they don't want to contribute yet to the company, because in SEP, if you contribute to yourself, you have to contribute to everyone else who's qualified for that SEP. And if you have employees, they are probably qualified for that SEP. And so if we're not ready to make that commitment, then we're looking at like outside the business accounts, or we might be looking at the partner, because that's the other thing. If you have a partner, like a life partner, not a business partner, then you can utilize the full family picture and say, save more in their 401k while you're still building the business, not ready to necessarily fund your employees' retirement account in the process. So we can kind of put that in full scope there. But finding a tool based off of where you are in the business and how big the business is going to be important. And, it gets into like very specifics of each individual plan there.
Right. I know we don't have enough time to really go into all those details, but I thought it would be good just to touch on that as, something for them to consider. So thank you for sharing that.
One thing I would also say for someone who is looking to sell one day, I mean, looking at a 401k is a really good way to protect your assets in case you do end up selling and there's a lawsuit. Because often when we come to the acquisition part, lawsuits tend to play a big role. And now you have your assets in a 401k. Those are protected in that scenario. And so you'd be better off for that. So something to think about just from a, risk protection standpoint as well.
Thank you for that tip. I know we're coming close to the end of the time we have together. So I wanted to ask if you have an offer that you would like to extend to our listeners, and how can they contact you if they have more questions or just want to connect with you?
Yeah, I work under a banner called United Financial Planning Group, but I actually market through Thinking Cap Financial. And so you can find me at thinkingcapfinancial.com or on LinkedIn. My name is Ryan Derousseau. I'm often there. And then I have a free ebook. It's about turning private income or solo income into wealth. So going into those 3 tactics of how to do so, either investing in the markets, investing in business, investing in real estate, and really go deeper into that. So I'll leave the link with you, Candy, and then you put in the show notes, because it's not a free link, but it's a free download. So feel free to go there. You can either watch the webinar or send me your email and I'll send along the ebook.
Perfect. Well, thank you, Ryan, for being a guest on my show. And I really appreciate it. And I did enjoy our discussion today.
Yeah, fantastic. Thanks for having me.
To the listener, if you enjoyed today's topic and you want to hear additional information, you can find access to exclusive content in the show notes. Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guest and receiving the offer they had to share, a link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310-534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.